Okay, so welcome back. Let's start off with cyber insurance. A lot of the cyber insurance has already been covered by Mr. Vasu and Mr. Venu when they talk about risk assessment, when they talk about the inside out assessment without having any inputs from our SME clients, an ability to really assess their risk. And it can be further actually enhanced by having a questionnaire. I have checked the questionnaire that Mr. Vasu's team uses and the different proposal forms that we use in the insurance world. Every question in the proposal forms are covered by them and much more than that. So the entire assessment part of it has been taken care of. It gives you a score. So what we are now coming into is the product itself. So the risk assessment part of it, understanding the risk, all that having been done, we will get into the insurance product itself. One of the key things that we have to remember, it's a very unique policy. It's one of the very few policies, or probably the only policy, which covers both the first party risk and the third party risk. I hope all of you will agree with me. First party is the insured. So any loss or damage to the insured is covered. The second party is the insurer. Anybody else is the third party. So any liability that comes due to some act or incident that has happened because of which third parties are financially affected and they put a liability claim, that also is covered under cyber insurance. Having said that, one thing that we need to remember, these cyber insurance policies are very, very wide in coverage, absolutely very beautifully drafted, yet each policy is different. Yet each policy covers only a few of these. There are rarely any policy. What I'm going to discuss now will be covered by one single policy, unless it is manuscripted or taken care of. And second thing we have to remember, the market has become very hard. Reinsurers are withdrawing their capacity, and hence the coverage is shrinking, the pricing is increasing, the deductibles are increasing. So this is something that we have to remember. The next thing that I wanted to, before we get into the cyber insurance itself, want to say that our property policies exclude cyber incidents or cyber acts. Most of the policies are excluding the cyber incidents and cyber acts. So if you have examples that both Mr. Shashanka and Venu and Vasu have quoted, wherein they talk about probably a production getting affected, a machinery getting affected, an example of a German steel plant where a explosion has taken place, all of those are not covered under the cyber insurance. Unfortunately, they are also not covered under your property policies unless you are specifically buying your insurance to take care of that particular element. What we call as a cyber gap is certainly there. Unless you are covering that gap, your protection is not full. So let us be very, very clear that bodily injury or property damage is not part of this particular policy. Having said that, because the expenses, what actually happens of a cyber attack or a cyber incident or a cyber act has all been described. I am now getting into what the policies cover. I am repeating, the policies are not standard. Not every policy covers everything that I talk about. It's a combination of different policies that I'm talking about. Hence, within the policies, the nomenclature used is different. Somebody may talk about a nomenclature privacy notification. Somebody may use the word data breach notification. So please remember, the nomenclature itself may be different. And within the coverage, there may be limitations as far as the coverage is concerned. Some insurer may be covering much more. Some insurer may be covering much less. Now, when we talk about broadly, we can classify one of the coverages or one of the costs are privacy notification and crisis management expenses coverage. This is the one part of the coverage that you will find. One of the main costs is having had an incident, you need to do a root cause analysis. You need to have a forensic expert. Now the question is, does your policy cover the cost of that forensic expert? The second thing is, and I hope all of you will agree with me, forensics, cybersecurity certainly does forensics, but lot of these large big four or the big five that we talk about, they also do forensics, and it's a very, very costly affair. The question that we have to ask is it covered? Even if it is covered, does the insurer give you support in that by actually having one of these forensics or experts coming in to actually do your root cause analysis? So this is something that we need to keep in mind. And for those policies where forensics is not actually provided by the insurance company, very, very important that the client actually keeps the insurer completely in the loop whenever they are actually appointing the forensic expert to basically do the root cause analysis in order to secure the site, in order to reduce the loss, in order to reduce or prevent future breaches. All these are the activities, a very, very costly activity. The insurance policy, you should ensure, covers this particular part. The second part that we can talk about under these expenses is the need for a public relations agency. Now, remember when Vasu was talking about the reputation loss, and I hope all of you will agree with me that we really don't cover reputation losses under insurance policies. Yet, there is some part of the reputation loss wherein we are talking about appointing public relations agencies, PR agencies, and ensuring that the reputation damage is reduced or minimized. Now, again, when you look at this policy, there are some policies which cover the damage or the agency being used to reduce the impact on the entity or the organization. There are some policies which go beyond and talk about even the individual directors or the CEO or the CFO or the data officer, their reputation also being taken care by the public relations agency. So this is again a cost which some of the insurance coverages or insurance policies are actually giving it. The third cost that some of the insurance policies, again, I'm repeating, not all policies are giving these things and the coverages is shrinking. So you need to specifically check which of them are actually giving such coverage. When you have a breach, it is quite possible that you, based on the regulation or based on your internal policies or probably based on the agreements that you have signed, you are supposed to inform whoever are the individuals, whoever are the entities where the breach has affected them, especially if there are individuals, and examples have been shown to you where millions of individuals could be affected by one single incident. Now, when millions of incidents, people have to be notified about that breach, it is quite possible that a lot of those people will actually come under pressure. They will keep calling you. Your normal team will not be able to handle that. You may have to set up a call center to handle the calls of people or individuals whose personal identifiable information has been breached. There are insurance policies which give you the cost of setting up that call center also. So this is something that we need to remember. And next, there are policies which give you the cost of notifying itself for those people whose personal identifiable information has been compromised. Another thing that you will find as a coverage, not necessarily in every policy, is what are called as the credit monitoring costs. Whenever a breach occurs, especially I'm talking of individuals, whenever individuals data has been breached, there's a compromise, it is quite possible that the credit agencies are actually appointed, or credit monitoring agencies. There are specialist organizations for that. They have to be appointed, and it costs money. What will they do? Up to the policies, up to a max. There are some policies which cover for 6 months. There are some policies which cover for 1 year. The cost of appointing these monitoring agencies who will monitor the credit history of all these individuals, so that if there is any compromise that's happening, that is identified, so that the loss can be minimized. The next thing is paying the cost to restore the stolen identities as a result of data breach. Example, you may have to notify banks, you may have to notify credit card companies. The banks and credit card companies may actually be having to replace the cards. You will be responsible for that. You will have to pay for that. Those costs also are covered by some of the insurance policies. Basically, one thing you have to remember, all these are related to no fault liability. Fundamentally, whether there's a fault of the client because of which the breach has occurred of the insured, or there's no fault, each of these expenses are covered under the policy. The next set of expenses that are covered, as again Mr. Vasu and Mr. Venu have very clearly mentioned, especially on the GDPR and the type of fines that have been levied. One thing that was beautifully put by both of them was the fact that there are two people who are making a lot of money because of this cyber risk. One is the cyber criminals. The second is regulatory agencies. And the type of fines that are being put can be very, very heavy. Again, most of us know that most insurance policies are against paying fines and penalties. Insurance policies do not cover that. Yet, this is one unique policy where fines and penalties are covered. Some only cover fines, some cover fines and penalties. But one of the things that most of these policies talk about is to the extent which is basically payable as per law. Basically, it's quite possible that the agencies or the regulatory agencies may put a penalty, and as per law, you are not allowed to reimburse as an insurance company, in which case the insurance company does not pay. Otherwise, fines and penalties are being covered by this policy now, and which can be a very, very huge. Now it covers, and remember, especially your clients in US, you are handling, or in Europe, and especially in US, you have state laws, you have federal laws. There was one example of the retail firm called Target, which happened wherein millions of individuals' data was breached, including the financial information, and more than 40 state governments, I repeat, more than 40 state governments in US had done a parallel investigation, what you call as the forensics or the root cause analysis. Now remember, you as a client will do your own investigation, and the cost is being paid by the insurance company. A regulator may do their own investigation, and if a regulator does an investigation, certainly they will put the cost onto our insured. So when they are putting the cost onto the insured, we need to look for policies which are covering those costs. They can also put a case against the insured, in which case we need to be hiring attorneys or to either consult with the regulators during investigations, or to even fight a case in the court of law. All these costs are covered as a part of the regulatory defense and penalties coverage. The payment of regulatory fines and penalties that are levied against the insured as a result of the breach is also covered by some of the policies. As I said, some of them cover only fines, some of them cover fines and penalties, some of them are very limited, that we need to look at only at the wording. Looking at the heading, you will never be able to judge that a particular aspect has been covered. Regulatory defense and penalties coverage is one of the rare types that I talked about, where normally, because it's contrary public policy, we don't cover it, but under this policy, we do cover it, since data breaches typically involve customers residing in multiple states, especially in the US. In India, that's not a major problem because we have only one single law, despite being a federal structure. In US, you have many laws that need to be adhered to, which will be a very costly affair. What are the other coverages that are there? You have the cyber extortion cost. We have been talked about. The actual payment for the cyber extortion is also covered. The one question that may come up, what we just talked about, is the payment being in Bitcoins. Please remember, it's a reimbursement that most of the policies do. Insurance companies will not be paying in Bitcoins. They will be paying the equivalent amount. Not only that, whenever a cyber extortion occurs, you need to be putting in a specialist negotiator in order to ensure that the negotiation happens with the cyber criminals. The cost of that negotiator is also covered in some of the policies. The next thing is the data restoration costs, again, not covered in every policy, but Mr. Vasu and Mr. Venu were talking about the huge amount that you need to be spending as far as data restoration is concerned. The next coverage, again, very few policies are giving it, wherein examples were given about somebody hacking a CEO's email or a customer's email, sending communication, asking a particular bill to be settled to a particular account, you give it, e-theft, e-communication loss, all of these are possible, which are also covered in some of the policies. At the end of the day, all these will lead to business interruption. So when we talk about business interruption, there are policies, and most of the policies are actually covering the business interruption. We'll get into detail in the subsequent slides. Now let's look at the last part of it, which is the liability coverage part of it. As you would appreciate that basic coverage is for the liability, third-party liability, your first-party coverage also being part of it. So when we talk about liability, it covers the insured's liability for damages resulting from a data breach. Such liability can result from loss, theft, or unauthorized disclosure of personally identifiable information in the insured's care, custody, and control. Damage to data stored in the insured's computer systems belonging to third party. Transmission of malicious code or denial of service to a third party's computer system. Failure to timely disclose a data breach. Failure of the insured to comply with its own privacy policy prohibiting disclosure or sharing of personal information. Failure to administer an identity theft program required by government regulation or to take necessary actions to prevent identity theft. In addition, this insuring agreement covers the lost cost of defending. So defense costs are also part of the coverage as far as these policies are concerned. I've just given you some of the insuring clauses or the insurance coverages. And just to give you an idea, I've not identified the insurance companies' names, just to tell you that there are different policies covering different things. I've given on the first column the different costs, credit monitoring costs, crisis management costs, cyber extortion cost, and so on. And I've given you to show you that there are many policies which are covering only part of it. Remember, it does not end there. If I say credit monitoring cost being covered by insurer 1, 3, 4, and 5, it doesn't mean all of them are covering the same thing. Their coverage may be limited. Somebody will be covering much wider. In India, IRDA thought of actually standardizing the cyber policy. Thankfully, it did not come to any real positive end, because if that had happened, it would have become a complete price war rather than a product war. Today, some of you are brokers, you have a big role to play. Some of you are insurers, we have looked at how you have to assess the risk. And these are places where you can really innovate so that you are able to differentiate not in terms of pricing, but in terms of product itself